Welcome, guys. Welcome to this very new video. So, this is our very first video on the trading course. Now, and in this video, we're dealing on basic market structure, understanding highs and lows. So, now let's go straight into the video. Now, what is market structure? Market structure is the behavior, condition, and current flow of the market. It highlights support and resistance levels, supply and demand zones, swing highs and swing lows in order to project the trend of the market. Now, since we're talking about trend, now what is a trend? A trend is simply a consistent directional movement of price over a period of time. Now, trends are made up of highs and lows, and it is the direction of those highs and lows that establish a market trend. Now, whether those highs and lows are moving upwards or downwards or sideways, it does not matter. They basically indicate that the market is trending. Now, which then brings to us the reason why we study market structure, because market structure tells us if the market is trading or not. Now, why? Because market structure indicates trend, and trend is telling you that to identify trends, you need to be able to figure out the highs and the lows of the market. And once you can figure out the highs and the lows of the market, then you are starting to understand the trend and the structure of the market, which then that's what market structure is all about. So let's look into this diagram and see what I'm talking about. So, for instance, let's say we are in a let's say for instance the market starting price is starting from this particular point, because you can see for the definition that trend is it's a consistent, it's when price is moving consistently in a particular direction. So it's basically we're talking about price. So let's look at this example. They made this stick. So now let's, for instance, price is starting from this point here, from this point. Price starting from this point, yeah, and then the price moves from this point, and this point is around 1.80763, and the price moves from this point, moves up to this point here, and this point is around 1.97827, and then the price comes down again into this particular price, and then price goes back to this price comes back here to this price, goes again to this point. Now we can clearly see in this particular structure, and we now understand that structure is behavior. Now we can clearly see with this market behavior, price is moving from 1.80847 to 1.97658. Price is moving from that point, from that price to the top, to that price above, and then coming back into that price, and then going back to the price above. So that's basically what market structure entails. Price moving from one price to another price creating highs and lows. Now we can clearly see that this is a low point. Price started from this low, created this high, created this low, created this high, created this low, created this high. Now in trading, there's what we call this particular kind of market structure. Now it's called a ranging market or a consolidating market, when price is just moving in between a particular range. When the market is moving inside a particular range of price, you can clearly see that price is not going below this this price, and price is not going above this price. Price is just moving inside of this range. So that's what we call sideways trend, consolidation trend, or a ranging trend, or a ranging market. So now let's look at other forms of highs and lows. Now let's because from the definition there we highlighted support and resistance. Now let's look at support and resistance, the dynamic support and resistance, which is also called a trend line, because trend line can be classified into dynamic support and resistance. So now let's look at this. Let's say for instance price starts from this point and goes into this plate. Now it goes up to 1.8824, and then price comes down, creating a swing low at 1.8076, 763. Now, I know a lot of you guys will be saying, how is this guy knowing the price? Now I'm going to show you. If I put my mouse there, you can clearly see. Look at, you follow the mouse to your right hand side, you will see the price at this level here. So if I come here, you see the price. That's the price. So now we could look at this scenario. We have price creating these highs and lows, creating these highs, creating that high, creating this low, creating another high, creating another low, creating another high, creating another low, creating another high, and another low. So this is a form of market structure, and in this way, we can clearly see that price is creating highs and lows, which indicates to us that the market is actually trending. And now the question is, which part is the market trending to? Where is the market trending to? That's how you know. That's how you identify trends. Now, when market is creating higher highs, when price creates, when price creates, when price creates higher higher highs and higher lows, higher lows. This basically tells us that the market is trending upwards. So in trading, you can when the market is trending upward, you can either use the word the market is trending upward, the market is trending bullish. Yes, the market is trending. Yes, upwards or bullish. Yeah, that's the majorly two words that you can use to describe that. So when the market is moving upwards, you can say the market is trending to the bullish side. Sorry, bullish. I mean bullish. If I said bearish, I'm sorry. I mean bullish. When price is going up, it signifies that the price is bullish. Now we can clearly see that the market is creating higher highs. What do I mean by higher highs? Now you can see this low is clearly a lower point than this particular low. So this low is higher than this low, and this low right here is higher than this low. So the market is creating high, a high, a low, and higher high, and higher low, and higher high, and higher low. So this low is actually higher than this low. So when price prints higher highs and higher lows in the market, it clearly indicates that the price is bullish. Bullish. Price is bullish, or the price is in an uptrend. Price is in an uptrend. Now, when price starts printing lower highs, lower lows, lower highs, um, lower low, lower highs, lower lows. Now, this clearly indicates to us that the market is now what? The market is now bearish. Bearish. Now, this is bearish. You can research on these words to understand them more. And this is bearish. Now, this basically means the market is going what? In a downtrend. In a downtrend. And like the example I stated, when the market is going in a particular range, it means that the market is either consolidating or the market is ranging. Yes, on market is ranging. So those are different trends that we have in the market. We have the bullish trend, we have the bearish trend, and we have the sideways trend. So basically, to identify a trend is when price is creating highs and lows. Now, to note there are different type of trend. We have three different type of trend. We have the bearish trend, the bullish trend, and the sideways trend. Now, what is a bullish trend? The bullish trend is when price is creating higher highs and higher lows in the market. And the bearish trend is when price is printing and creating lower highs and lower lows. And why the consolidation or the sideways trend is when price is ranging a between a range, yes, a range of price from one price to another price, not creating higher highs and not creating lower lows, just going from one price to another price without creating higher highs and higher lows. So that's what we call sideways or consolidation trend. So so it's very simple, very easy to understand. So these things are not really difficult. You can once you can grasp them, once you can grasp this concept. Now, I would definitely advise you guys to watch this video over and over again to understand the concept and be able to grasp the concept. So I'm going to go again. I'm going to plot this diagram again. So when price is moving in this kind of in this kind of behavior or pattern like this, higher highs, higher lows, higher highs, higher lows, higher highs. Now this basically means that that price is creating a bullish trend and an upward trend. And then if price is doing when price is creating doing the opposite, which is printing lower highs, lower lows, lower highs, lower lows, lower highs, lower highs rather, lower lows, yes, lower highs, lower lows. Now it basically means that the market is bearish. Now when price is one moving from one price to another price without creating higher highs, higher lows, and that basically means that the market is trending sideways. Now this indicates now this is a range of price. This is a range of price. The market is going sideways. Market's going sideways. So that those are the three trends that we basically be working with all through this or 3 years, three structure. Now let us see if we can let's look at price. Let's look at price and see how we can identify um these things on real markets, on the real price candlestick. I I believe you guys would have gone through the for those of you that will have found yourself in this place, I believe you've learned the basics of forex trading, which is like understanding candlestick, what is forex, what is margins, and all those things. If you have not and you are here, I would advise you um go to YouTube. There are so many basic videos on the basics of forex. You can go to Baby Peeps and check out those contents, and it'll be easier for you to understand these things. And then when you are trying to move to the next level, you can now come here and watch these videos. Now, looking at this video, you can clearly see on this price, a price printing different kind of structure. Different now we can see price creating this structure here. You can see this price creating higher there's a low, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, lower low, lower high, lower low. So now this basically means that the trended market went from this price, the market went from this particular price here to this particular price here from 13 1.3036 to 1.2797 yeah, so price trended from this place into this place. And how did price go upwards or the price go downwards? Price actually went downwards, and the price was creating a low, created a lower high, a lower low, a lower high, a lower low, a lower high. So that's basically how to identify your basic market structure. So now the assignments I'm going to be giving in this particular video, because I want you guys to get better. So this is where you now put in your time and effort. Now I'm going to be giving this assignment. I want you guys to watch the video. I would advise you watch the video more than 2 times. Watch it over and over again. Take notes. Watch the video. Look at the diagram. Draw out those diagram, and then go to your chart and replicate it on your chart. You can go to any time frame. Like I said, you need to have studied the basics of forex, learn the basics of trading view. This platform I'm using is trading view. You guys should at least make research and understand how to use trading view. Set up your chart very well, make it clean, and then look at different time. You can come to different time frame. You can go to 4 hours, plot out the structure, mark out lower highs, lower lows. So Basically, what I want you guys to do is to mark one swing point to another swing point. So just come here, pick, just go to any time, any parts, pick your line tool. Yes, this line tool, you can find it here. You can find it here. You come to, you look at, you have the 1, 2, 3, 4, 5, 6. The sixth one, you click on it. You can use this polyline. Yes, you can either use this polyline, or you can come to, yes, you can either use that one, and then you click on it. Yeah, I already saved them, or let me use the word bookmarked, or make them favorite and then bookmark them. Yes, so you can start from any point, just draw it anyhow you understand it, and then don't worry, we progress throughout the video. Just draw it anyhow you understand it. Just pick like this, just one click. Just pick any swing points that you can clearly see that price make a retracement. Just pick out any points, any points you can see. Let it, it can you, it does not have to be very, very visible. Just pick out any point you can see, and then try to understand if price trended in a bearish market, or a bullish market, or in a sideways market at that particular point. So this is what I want you to do. And when you do this time and time and time again, you master these things, and you gain perfection. Like I said, this is where you have to invest your time and effort to study what you have learned here. So see you guys in the next video. Peace.